This is Good Morning Mumbai with HrishiKay.
Friday edition of Talking Finance with Saurabh Mittal, my finance expert. Hi Saurabh, how are you?
Very good, Rishi.
All set and prepared for the budget? So, there's so many articles floating around on what should be done, shouldn't be done. What is your wish list for budget 2020, Saurabh?
Yeah, so like you said, budget 2020 is being announced tomorrow. And like every year, the euphoria on budget expectations is very high. Just to give you a background, budget of 2019 saw a significant increase in surcharge rates, which increased the effective tax rate for those at the higher income levels. And just to give you an example, the tax rates increased from 35.88% to 42.74%, including surcharge. This has put India on the trajectory of significantly higher personal income tax rates globally. Subsequently, there has been a slicing down on corporate tax rates in last 6 months, which has triggered high hopes on reduction in personal tax rates too.
Now, obviously, if there's a cut in the individual tax rate, it's going to enhance disposable income.
Correct.
And that's going to increase spending. And that's
Correct.
what we want right now.
Actually, because that's the whole hope, that if that really happens, it will augment individual spending, positively impacting the middle class sector, whose major source of income is mainly employment. Again, the basic exemption of 2.5 lakh has been unchanged since 2014-15. With its focus on widening the tax base, the government has not increased this exemption limit. Rather, a rebate has been provided to individuals where the total tax income does not exceed rupees 5 lakh rupees.
There's also a steep hike of tax rate. Yeah?
Correct. So, because of this provision where they have not increased the basic tax limit, there is a steep hike of rate from 5% to 20% where the income levels exceeds 5 lakh rupees, which is significantly impacting a take-home pay. A softening of tax rate at this level is highly expected. Another high expectations is deductions for children tuition fees, which is covered under Section 80C. This 80C limit has an overall limit of 1,50,000 rupees. In today's competitive world, parents want the best for their children and spend significantly on education from premier schools, maybe private classes which are happening after school, or various extracurricular activities. The expectation is that a separate deductions be provided for education expenses. These deductions will majorly help an individual in saving tax on such high expenses.
Let's talk about fixed deposits. There is no deduction for interest income from fixed deposits currently, right, Saurabh?
Which is true. It's not there. There is a deduction for savings account interest, which is only limited to only 10,000 rupees, which I think is very low. The limit was increased to 50,000 rupees for senior citizens. Now, extending the deductions to fixed deposit interest as well as enhancing the quantum to 50,000 rupees across the board is also on the wish list.
So, what are your hopes? What are you expecting from the government as far as tomorrow is concerned, Saurabh?
Yeah, so as far as these tax provisions which will directly impact middle class people, as far as equity markets are concerned, there are some level of hope. There is a high hope that government may abolish long-term capital gain on equities and may rationalize dividend distribution tax which is paid by corporates. In short, the middle income group